Hi all, a very good morning. So we are continuing with a session on indirect tax portion of the subject for C Inter. Uh, let's start with the questions. We'll keep the same modality like we discussed last time. First, I'll go to the question. You share your views. We'll discuss the provisions, and then we'll see how the provisions are made applicable to the question. Right. So the first question: Namo Shankar Limited, a registered supplier in Mumbai, has supplied goods to Narad Traders and Nandi Motors Limited, located in Ahmedabad and Pune. Namo Shankar has furnished the following details. So if you see the question, Namo Shankar is the taxpayer registered in Maharashtra. He has supplied goods to two customers. One is Narad Traders, another is Nandi Motors. Narad Traders is located in Gujarat and Nandi Motors is located in the same state of Maharashtra. So now let's see what details are furnished for the taxpayer. So price of the goods is given excluding GST, 10,000 to Narad Traders, who is in Ahmedabad, right? Narad was in Ahmedabad, right? So, and 30,000 to Nandi Motors, who is in Pune, Maharashtra. Then the supplier has levied other incidental charges like packing charges 500, commission 500 rupees, weighment charges to Nandi Motors 2,000 rupees, and there's a discount for prompt payment recorded in the invoice for 1,000 rupees to Nandi Motors. These are the facts. Items given in point 2 to 5, that means apart from point 1, have not been considered while arriving at the basic price, that is the 10,000 rupees to Nara Traders and 30,000 to Nandi Motors. Now, these are the these are the figures basically given for the question, that they have the basic price, the packing charges, the commission, weighment, and discount. So there are basically these things for which we'll have to decide what treatment we are planning to give them, right? Compute the GST liability. CGST, SGST, and IGST is the case maybe of Namo Shankar Limited for the given month. Assume the rates of taxes will be as under. So CGST, SGST, IGST make suitable exemptions wherever necessary. The supply bid to Narad Traders is an interstate supply. Since place of supply is not a chapter in your syllabus, they have mentioned here that it's an interstate supply. Because Maharashtra to Gujarat, it becomes an interstate supply. Now let's see the answers. Before we go to the answer, I would want someone to brief the provision and then tell me what could be the answer. Then we'll discuss the answer. So I would want someone to unmute, tell the provision and the answer as well. It's a very simple question. Someone? No one? You might discuss whatever you know, whatever provision you remember, you can discuss. There's no problem if you're right or wrong, that's no issue. But let's make an attempt. Even if you don't know the entire answer, if you know at least 1 or 2 points, at least we can discuss those points. Very simple question.
Sir?
Yeah, Naina.
Sir, according to section 15 subsection 1, we have to find out the value of supply, which is the transaction value. So there are two conditions for it to be a transaction value. The first condition is that the two persons, that is the buyer and the seller, should not be related parties, and the price shall be the sole consideration.
Very good.
So if these two conditions are satisfied, then the value of supply shall be the transaction value.
Super. Okay.
And section 15 subsection 2 deals with the inclusion in values, which specifies certain items which have to be included. So in that, packaging charges, commission, weighment charges will be included in the price of the goods.
Okay.
And the discount, which is that shall be reduced from the price.
Okay. Fantastic, Nana. You have briefed the provision as well as the apt answers for all the questions. So um, great, Nana. So basically, what Nana said first was, see, whenever we have a question in the exam, see, again to reiterate the same point, indirect tax is only 40 marks in HC Inter, right? But out of 40, if you give a little focus, you can easily score 30 to 35 out of 40. I'm not exaggerating, because in CA Inter, you have all the easy chapters applicable for exams. When you go to CA final, you will have a lot of other chapters which are having a lot of intricacies or little complications, which you will have in your CA final. Last week, CA final results came and so many students have scored 70, 74. A lot of my articles have scored 73, 74, 75 in indirect taxes in CA final. So in CA final itself, when people score so much marks, why not in CA Inter, where we have a simple syllabus? So again, I'm saying, please focus on this indirect tax, because very simple. 40 marks you can easily target to score 30 to 35, provided you pay a little attention to this subject. Not too much attention also. If you give little attention also, you can easily score good marks, right? So a very simple question it was. Nana rightly said, it's all simple logic. See, to put it in a nutshell, whatever value I charge in the invoice, on that I have to charge GST. Simple. So when I'm supplying goods, let's say example, I'm in Chennai and my customer is in Mumbai. I supply goods from Chennai to Mumbai to my customer. When I supply goods from Chennai to Mumbai, I might incur a lot of charges like transportation charges, I might incur loading charges, I might incur insurance charges, because I'm arranging insurance for the goods for going from Chennai to Mumbai. So I levy all these charges to my customer in the invoice. Simple logic is, whatever charges I put in the invoice, on that GST has to be charged. Same principle. When we go to the wordings of the law, first, Nana rightly said the provisions that what is the transaction value? Transaction will be the price, but price should not be the sole consideration, and buyer and seller should not be related. Section 15(1), two conditions only. If that is satisfied, then that's price, yes. Then 15(2) says incidental charges should be included, like transportation, packing. Then we have reimbursement, other clauses. But the basic clauses, the incidental charges which are related to the transaction should be included for the purpose of charging GST. So it's packing charge or commission or insurance or payment, whatever charge you call it, when you are collecting from the customer, on that also you have to charge GST. Very simple question, very simple provision. Whatever I charge to my customer and I collect from him, on that I have to charge him GST. Only on GST we do not charge again GST, right? So this was how it that we include everything to charge GST. Then we come to the next subsection, section 15, subsection 3 talks about discount. See, discount we have provided in the invoice itself. So on net value only we are going to charge GST, because total price, etc., minus discount. On net value only you will be charging GST. Net value only you are going to charge your customer. On that you have to charge GST. As I said, whatever you charge in the invoice, on that you charge GST. I give a discount in the invoice, so net value only I'm going to charge GST. On discounts which I give after issuing the invoice, there are conditions. Can anyone tell me what are the conditions? If they satisfy, we can reduce discount if it's a post-supply discount. So let's say here I have given the discount in the invoice. Let's say example, I give the invoice. After issuing the invoice, I decide to give some discount to my customer, because let's say COVID-19 is unable to make me prompt payment. So I say, okay, I'll give 5% discount, please give me my payment. So in that case, that 5% discount which I give after making a supply, because he's not giving me money, so considering that, I give him a 5% discount. Can I reduce that 5% discount to charge GST or
not? Subject to, sir, 3 conditions they are.
Fantastic. Nana, just 1 second. Anyone else other than Nana wants to answer? Anyone else wants to volunteer? Right, Nana, please go ahead.
So, sir, that it should have been, there should be an agreement that existed at the time of supply. Second is that it has to be linked to the invoices. And the third one is that the proportionate ITC has to be reversed by the recipient.
Fantastic, Nana. I think you have decided to score 35 or maybe more than that. So great.
Yes, sir.
Very rightly said by you. So it's very
Thank
simple.
you,
There are 3 conditions. There are 3 conditions for the discount. Very rightly said by Nana. There are 3 conditions. If you satisfy, we can reduce the value from the discount. Sorry, we can reduce the discount from the value. So that one of the condition is when I make a supply to my customer, before or at the time of making supply, we should have agreed that yes, if you make payment to me within so many days, I will give a discount. If you purchase so many goods from me, I will give a discount. The discounting terms should have been agreed before making supply. So there should have been agreement where we both should have agreed that yes, on satisfaction of so and so condition, I am going to give you some discount, right? That is one of the conditions. Next condition is it should be linked to the invoice. That means it should be in percentage terms. It should not be a pro rata discount like flat 5,000, 10,000. It should be linked to my invoices. The discount should be linked to my invoices. Third is my recipient should reverse input tax rate. Simple logic. I charge you 1 lakh rupees. On that, I charge you GST. You as a customer claim input tax credit on that tax amount. Now what happens? That tax amount I reverse now because I giving a 5,000 rupees discount. So I reverse GST. So I paid GST on 1 lakh to the government. Now I'm adjusting that liability. I'm reducing the liability by 5,000 on that 5,000. So let's say example, 10% rate example. So on 1 lakh, I paid 10,000, let's say 10,000 rupees. So on 5,000, when I'm reversing the discount, I'm giving a credit note for discount. I have to reverse 10% GST on 5,000, which is 500 rupees. So net tax paid by me to the government is only 9,500 rupees. Right? So now same treatment when we talk about customer input tax credit. So I charge GST, he took full input tax credit. Now, when I'm giving him a discount, so I'm reversing my GST liability. So my customer should also reverse input tax rate of 100 rupees here. That's the third condition. Why? Because you think logically, if I pay GST to the government net for 9,500 rupees, but my customer takes full input tax rate of 10,000 rupees, it is wrong, right? So whatever I pay, only my customer can take credit. So that logic applies the third condition. So these are the three conditions if I want to reverse GST on discount or I want to reduce discount from the value for the purpose of charging GST. If it is post supply, pre-supply, if that means if I charge the invoice itself, then it has to be on the net value which I charge to my customer, I have to charge GST. Right? Any doubts on this? Anyone has any doubts?
No, sir.
Right, done. So we go to the next point. Next question is let's brush up with the answer, whatever we discussed. So if you see price of the goods, Nara Traders 10,000, Nandi Motors 30,000. Then incidental charges I said we will have to add. So if you see packing charges, we are adding. So 500 rupees I add, commission I add, payment charges I add to Nandi Motors. So all the three charges I add. Less as we discussed discount, since it's given in the invoice, I will reduce the discount of 1,000. So the net value of 11,000 and here 31,000, we have to charge GST. Rate of GST given in the question is 18%. And we saw that Nara Traders is located in Gujarat. So it's an interstate supply. I will have to charge IGST. So 18% IGST on 11,000 rupees comes to 1980. And to Nandi Motors in the same state of Maharashtra. So I will have to charge 9% CGST, 9% SGST. So 9% 31,000 comes to 2790 CGST and 2790 SGST. So I will have to pay this much tax to the government for that month liability. So now we go to the next question. Mr. Nikunj, a supplier of goods, pays GST under regular scheme. He is not eligible for any threshold scheme exemption. So he's registered person under GST. Let's assume he is not eligible for threshold exemption because he would have attracted compulsory registration under section 24, etc. Let's assume that he has made the following outward supplies in the month of August. So please remember, there is no threshold to foreign. So what is the turnover? We have to calculate liability, right? So intra-state supplies, that means something within the state he has sold for 6 lakh rupees. Outside the state he has sold for 2 lakh rupees. So 6 lakhs intra, 2 lakhs is inter. He is also furnished following information in respect of purchases made by him from registered dealers during the month of August. So purchase details. Interstate purchase of goods 4 lakhs. Sorry, intrastate 4 lakhs and interstate purchase of goods for 50,000, right? So intra 4 lakhs, inter 50,000. Now, they had some opening input tax. The taxpayer had some opening input tax credit with him. What was that? CGST was 15,000, SGST was 35,000, and IGST was 20,000. Now, so we are going to determine the liability for the month of August. Please note here, the liability for the month of August we will calculate, but before that, the question says opening ITC also the taxpayer had. Opening was 15, 35, and 20. Now they're saying rate of GST is 18,000 rupees on both outward and inward supplies, right? They're saying all the conditions for ITC has been assumed that it is compliant, right? Now they're saying asking us to compute the minimum GST travel by Nikunj for the month of August. Now, do anyone want to attempt? Okay, first let me ask a simple question. What would be the gross liability here? Leave input tax credit, ignore input tax credit. Just tell me what should be the gross liability on sales. Leave input tax credit for the time being. Anyone? What will be the gross liability? Leave input tax credit. Output liability. Okay. See, the sale value is given. Intra-state supply 6 lakh rupees. Intra means within the state, I will have to charge CGST and SGST. The question says rate of GST is 18%. So on 6 lakhs, 9% will be CGST, 9% will be SGST. Simple. On 2 lakhs, which is interstate supply, right? The next is interstate supply, 2 lakh rupees. Interstate means I will have to pay IGST. So on 2 lakh rupees, I will pay IGST. So on 2 lakh rupees, I will calculate 18% IGST. Simple. So that is output liability. Then I will have to calculate input tax rate. On 4 lakh rupees, the supplier would have charged me 9% CGST, 9% SGST. On 50,000 rupees, the supplier would have charged me 18% IGST. So total ITC, we will get opening balance here, we will add this. So we had total ITC, we have total liability. We will adjust and pay the net tax payable, right? Let's see the answer. So as I said, on 6 lakhs, which is an intra-state supply, I will pay 9% CGST and 9% SGST. So on 6 lakhs, 54,000 CGST, 54,000 SGST. And on interstate supply, 2 lakh rupees turnover. So on that 18% comes to 36,000 rupees. So our total liability in the question for the month of August for Nikunj is 1,08,000 rupees CGST, SGST, 36,000 IGST. So we have to pay these three taxes: CGST, SGST, and IGST. 54, 54, and 36. Let's see how much ITC we have. So opening is given in the question: CGST, SGST, and IGST 15, 35, 20. And on the purchases, intrastate 4 lakhs purchase value. So on that 9% comes to 36,000 CGST, 9% 36,000 SGST. Then interstate purchase 50,000 rupees. So on 50,000 you get IGST of 18%, 9,000 input tax credit. So now the total ITC, if you see, total input tax credit CGST is 15,000, SGST is 71,000, and IGST is 29,000. So we know the liability, we know the total ITC available. Now what we have to do is, which input tax credit we will adjust against which output, so that we can arrive at the net tax payable under each head. Let's do that. So to just recollect the provision, first we will have to adjust IGST head, then CGST, then SGST. We'll follow the same order here. So GST payable under each head 54, 54, 36. We saw that, right? Liability in each head. Then comes the adjustment of input tax. So let's ITC credit of IGST. So IGST credit, first always we should adjust against IGST head. So now we see here how much IGST credit we have. We have total of 29,000 rupees, right? So now 36,000 is my liability. If you see 36,000, so I have 29,000 input tax credit with me. Fully I will adjust 29,000. So my IGST credit becomes 0. Total input tax credit, IGST head, I will adjust completely against IGST. Anything balance only I will take into CGST or SGST. But here my IGST total credit is exhausted here with 29,000. Now balance I will have to pay IGST. Fine, that we'll see later. Next, coming to CGST credit. How much CGST I have here? If you see, CGST total ITC, if you see, I have only 51,000 rupees. Now, my liability under is 54,000. So CGST liability is 54. Input is only 51. So I will adjust 51. CGST, if you remember, CGST credit, first we should adjust against CGST liability. If you have excess, you will adjust against which head? I repeat, CGST input tax credit, first you will adjust against CGST liability. Balance you will adjust against SGST or IGST?
IGST, sir.
Fantastic, because CGST and SGST we cannot inter adjust. I repeat, CGST and SGST we cannot do inter adjustment. Now, let me go to my first point. I said IGST credit I had 29,000. So I adjust completely against 36,000 liability. Now let's say the IGST credit is more than 36,000. So IGST credit, first I should adjust against IGST. Then if I have still IGST credit left, should I adjust against CGST or SGST? I repeat my question. Let's say example, I have IGST credit more than 36,000 rupees. 36,000 I adjust against IGST liability of 36,000. I still have some balance left, let's say 2,000 rupees. I will adjust that against CGST or SGST first. Okay, so there if you see, remember, the rule says first you have to exhaust IGST credit. So IGST credit first I will adjust against IGST liability. Balance if any, I can adjust against CGST or SGST or proportionately to CGST, SGST in any manner as per my wish. The law does not bar me for using the sequence in IGST. IGST credit, it says first I have to adjust against IGST liability. Then under SGST or CGST as per my wish in any proportion I want. Right? CGST we discussed, like Nana rightly said, first CGST liability, then against IGST. Next we come to SGST. So as of now, if you see, IGST we have some 7,000 payable, CGST we have some 3,000 payable. Next we come to SGST head. Let's see SGST how much credit I have. 71,000 input tax setup. Huge credit I have in SGST. Let's see now. So out of 71,000, I have SGST liability of 54,000. So SGST credit, first I have to adjust against SGST. Balance if any, I can adjust against IGST, but not against CGST. Why? Because as Nana rightly said, CGST and SGST cannot be inter-adjusted. So out of 71,000 rupees, 54,000 rupees I adjust against my SGST. Why? That is the total liability available. I will make SGST 0. Balance I have. Balance 17,000 rupees I have input tax hit under SGST. So I can adjust against IGST. So I go to IGST liability head. I have 7,000 payable. So I adjust balance amount 7,000 out of that 7,000 against SGST. So what happened? My SGST became 0. My SGST liability became 0. So SGST I have closing credit which I will carry forward of 10,000 rupees. And net liability I will pay is CGST 3,000 rupees. I repeat, net liability I will have to pay for that month is 3,000 rupees under CGST head. And I will have an excess credit of SGST head 10,000 rupees. Because out of 71, 61 I have adjusted, say 10,000 is the next. Let's move to the next question. Shri Krishna Private Limited, a registered supplier, furnishes the following information relating to goods sold by it to Shri Balram Private Limited. So supplier is Krishna, recipient is Balram. So the price of the goods, excluding taxes and other charges, mentioned at serial number 3, 5, and 6, 1 lakh rupees. Serial number 2, municipal tax 2,000 rupees. Then inspection charges 15,000. Then subsidy received from Shri Ram Trust. Subsidies directly linked to the goods supplied 50,000. Late fees for delayed payment inclusive of GST 1,000. Bracket says Shri Balram Private Limited paid the late fees. However, these charges were ultimately waived off by Shri Krishna, and the amount was refunded to Shri Balram during the same month. So it was refunded. So I think it becomes irrelevant because it was charged and refunded in the same month itself. So there is no impact of GST at all. So we can ignore this. Weighment charges. Such charges were paid by Balram to Radhe, etc. 2000 rupees. So this is the question. Anyone wants to make an attempt to discuss the portion answer? Question is simple. It says the price is basic price of 1 lakh. And there's a tax separately 2000 municipal tax. There's an inspection charge. There's some subsidy given. There's a late fees. Late fees I already said we have to ignore because net to net it is not even charged. So we can ignore that point. Payment charge levy 2000 rupees. So anyone wants to make an attempt? Anyone wants to make an attempt?
So directly I should say the answer. Like
yeah, Nan. You can say it's a simple question because same provision we already discussed in the first question. So you can directly tell the answer.
Yes, sir. So in the price of the goods, we have to add the municipal tax, then the inspection charges, then the subsidy, because it is not received by any state government or the central government. And then we have to add the payment charges.
Fantastic. Fantastic. Guys, I think others also should back up, whenever you have a class, probably you can revise and come, or please keep revising your syllabus on a regular basis. If you revise on a regular basis, your preparation is done. But if you keep everything for the end, it becomes very difficult. Probably some might be writing exams in the coming month, coming attempt also. So please keep revising your portions. If you keep revising, it becomes easy, because at the time of exams, you can just brush up your provisions. But if you don't remember the basics also, it becomes very challenging to revise your provisions because the syllabus is huge, not only indirect tax. I'm saying if you see all the total subjects in totality, the syllabus is huge. So please keep revising. It becomes very easy, right? So, right, Nena rightly said, 1 lakh is the basic price. So I will have to add tax. Why? Because as I said in valuation, incidental charges you have to add, so that it is given any tax other than GST also you will have to add. So municipal tax also we have to add for the purpose of charging GST. So during our classes we have discussed all the examples also. So 2000 rupees I will add 1 lakh 2000. Then inspection charges we discussed in the first question, that incidental charges we should add. So this is inspection charges. I said whatever charge I collect from a customer I have to charge GST. Simple logic, right? So plus 15,000, it becomes 1 lakh 17. Then subsidy. So Nana rightly said, if it's subsidy, again the valuation chapter we've discussed about subsidy, that if it's a subsidy received from government, we have to deduct from the price. But here it's subsidy received from a private institution, it's a trust. So this subsidy also will be added for the purpose of charging GST, because any subsidy received you cannot reduce, you will have to only add for the purpose of charging GST. Only if it's a government subsidy you can reduce, right? So 50,000 we will have to add. 1,000 rupees I said we have to ignore because it's not levied at all. Payment charge again 2,000 we'll have to add. So let's see. And see here it says note price of the goods is net of subsidy. So subsidy is already netted off. So we'll have to add subsidy for the purpose of charging GST. So if you see price of the goods 1 lakh, add 2,000 rupees municipal tax, add 15,000 incidental charges, which is inspection, then add subsidy value, then late fees for delayed payment. I said we have to include. Why? Because it is waived off. See, whenever you are making an assumption, why you have not included late fees, you have made it 0. In the exam, you will have to write an explanation, right? In bracket here, it's mentioned not includable since the value same is waived off. Please write the explanation in your exams. If you know the answer, if you know the figures, don't just work out the answer, write the provision also. What is the reason for you making some assumption? You have to write that. If you want to score the maximum full marks, please, I repeat, write the provision or the reasoning behind your answer. Next, payment charges we discussed we have to add. So value of taxable supply becomes 1,16,000 on that. Last question. Babla and Brothers is exclusively engaged in making exempt supply of goods and is thus not registered under GST law. It is unregistered. On 1st October, the exemption available on its goods gets withdrawn. That means on 1st October, it becomes taxable. On that same day, the turnover of Babla and Brothers was 50 lakhs. examine the eligibility of Babla and brothers for availing ITC, if any, right? So they are asking theoretical provision, theoretical question. It is a theoretical question. But before going to the answer, I want you to tell me why Babla and brothers, even though their turnover is more than 40 lakhs, why they have not taken GST registration? Can anyone tell me? This is not the question, but I am just asking you. Can anyone tell me why the person is not registered under GST till now, even though the turnover is 50 lakhs? Anyone? Okay. So if you see section 23, that means registration chapter, we have discussed that if a person is exclusively engaged in exempt supply of goods or services, he is not required to register. So let's say example, I might have a turnover of even 5 crores, but if my supplies are exempt, that let's say example, I deal in fruits and vegetables, not liable to GST. Even if my turnover is 5 crores, I'm not liable to register in GST law. So considering that provision, the person is not registered. This was not the question, but just I wanted to ask this question. Now, the question is basically they're asking the eligibility of availing ITC. Why? Because on 1st October, the products became taxable. Before going to the next sub question, this question answer, anyone wants to make an attempt? About what about ITC? Since it became taxable on 1st of October. So if you see section 18, subsection 1, if you see, when a person is unregistered and he becomes liable to register. Why? Because on 1st October, his turnover became taxable. So now into taxable exempt, so he'll have to get registered himself. So within 30 days, he will have to register himself. What happens was, since I get registered now, on my opening stock, I can take credit. Simple logic. See, when I purchase these goods before 1st October, the suppliers would have charged me GST, right? Probably suppliers would have charged me GST, but I would not have charged GST to my customers because my product was exempt, right? So let's say I would have purchased some raw materials. Out of the raw materials, I manufactured my goods. The raw materials vendors would have charged me GST. I would have paid them GST on my raw materials. Then I would have manufactured and sold the final product, which was exempt from GST. Now that product became taxable from 1st of October. So on 1st of October, I might have a lot of raw materials with me. These raw materials I would have purchased by paying GST before 1st of October. So now as per this provision, since my product has become taxable now, that means I'm liable to become registered now. See, this question is basically that you are not liable to register and you are registering now. So the first clause will apply in section 18. Why? Because this question, you are not liable to register, and now since your turnover is more than 50 lakhs, you are liable to register. So unregistered to registered, when you come to, then on the opening stock, you can claim input tax credit. So what are the purchase bills you have on that? What are the GST was charged on the opening stock? What are you have on the first day? You can take input tax credit. All this we have discussed a lot of examples in our regular classes. So on the opening stock, I can take credit. But the first clause, section 18(1)(a) says on capital goods, when you're unregistered and you become registered, on opening stock of capital goods, you cannot take credit. So what are the capital goods you have on that? You cannot take input tax credit. But on the goods, raw materials, semi-finished, finished goods, I can claim input tax credit, right? So this was the first question which I have answered in detail. Next question is little different, where Mamta Sales Traders trades in exempt goods and provides taxable services. So they were already registered under GST because there was some taxable and exempt supply. On 1st October, the exemption available on its goods gets withdrawn. So this is not the case of unregistered to register. This is the case of taxable to exempt. So we'll go into clause 4 or clause 5, 18 section 18, where it says that if your product was exempt, now it becomes taxable. Although earlier also you registered in GST, but now your product has become taxable. In that case also, on the opening stock, you can claim input tax credit because now you're going to charge GST on those products. On the opening stock, you can take credit. But the only difference between point A and point B is in point B, you can take input tax credit on capital goods also. I repeat, capital goods also you can take input tax credit. On the first provision, the first question, unregistered to registered, you cannot take credit on capital goods. But in case of exempt to taxable, you can take credit of capital goods also. But remember that when you take credit of capital goods, life of the capital goods is, can anyone tell me what is the life of capital goods in GST law? We have to raise reverse credit of 5% per quarter of part thereof, right? So life of the asset is 60 months, 5 years, basically 5 years. So on quarterly basis, we have to do the treatment. So whatever months before you purchase capital goods, reversing that balance credit you can take. So let's see the provisions. First question, assuming that Bablan Brothers applied for registration within 30 days, it will be entitled to take credit of input tax in respect of inputs in stock and inputs contained in semi-finished or finished goods held in stock, that is on 30th September on the previous date. Input tax rate on capital goods will not be available as input tax rate in this case. For the second part of the question, Mamta sales will be entitled to take credit of input tax in respect of inputs in stock and in finished goods held on the stock related with such exempt supply on the previous date, and also on capital goods exclusively used for exempt supply on the day immediately preceding the date on which it becomes taxable. Input tax on capital goods will be reduced by 5% per quarter part thereof from the date of invoice. So please remember, when exempt goods become taxable, you can take rate of raw materials, finished goods, semi-finished, etc., and also of capital goods. So this was the provision for critical provision for section 18.